Hey everyone, and welcome back to the channel. Today, we're diving into a major geopolitical event and what it means for the global markets. We're talking about the recent developments in Venezuela, specifically the reported U.S. military actions and the capture of President Nicolás Maduro. This is a huge story, and it's already sending ripples through the financial world. So, what does this mean for your investments and the stock market as a whole? Let's break it down. First off, whenever there's significant political instability, especially involving a major oil-producing nation like Venezuela, markets get jittery. We're likely to see a period of short-term volatility. Traders and investors hate uncertainty, and this situation is filled with it. What happens next in Venezuela? Who takes power? How will other countries react? These are all unanswered questions, and that uncertainty translates directly into stock market fluctuations. The most immediate and obvious impact will be on oil prices. Venezuela, despite its recent economic collapse, still sits on the world's largest proven oil reserves. Any disruption to its production, or more importantly, the potential for its production to come back online under a new government, can swing oil prices significantly. If the market anticipates a stable, pro-Western government that could ramp up oil exports, we might see a downward pressure on crude prices long-term. However, in the immediate short term, the conflict and uncertainty could actually cause a spike in oil prices as traders price in the risk of a wider, regional conflict that could disrupt supply chains. So, keep a close eye on oil stocks. Companies in the energy sector will be directly affected by these price movements. Another key commodity to watch is gold. Gold is the ultimate safe haven asset. During times of geopolitical turmoil and uncertainty, investors flock to gold, driving its price up. The events in Venezuela are exactly the kind of trigger that sends people running for safety. As the situation unfolds, we can expect the price of gold to be well supported, and it might even climb higher if the crisis escalates. This means that gold mining stocks and gold-backed ETFs could see a positive performance in the coming days and weeks. Now, let's talk about the broader stock market. Say, major indexes like the S&P 500 or even markets further afield like the Indian stock market. What's the impact there? Honestly, while the headlines are dramatic, the direct impact on major global indices is expected to be relatively limited. Why? Because for the last several years, Venezuela has been economically isolated. Due to sanctions and its own internal collapse, its economy has been largely disconnected from the global financial system. Its trade with major economies is minimal. So, unlike a crisis in a more integrated economy, the direct financial contagion from Venezuela itself is low. The main transmission mechanism to global stocks will be indirect, through those commodity price channels we just discussed, oil and gold. For a country like India, which is a major importer of oil, a sharp, sustained spike in crude prices could be problematic. It could lead to higher inflation and put pressure on the country's finances, which could then negatively impact its stock market. However, a short-term blip is unlikely to cause a major downturn. Most major economies and their stock markets are resilient enough to absorb this kind of indirect shock. So, to sum it all up, expect immediate, short-term volatility. The biggest moves will be in oil and gold. Energy stocks and gold-related assets are the ones to watch most closely. For the broader global stock market, the direct impact is likely contained. The real risk comes from the secondary effects of commodity price swings. The key takeaway here is not to panic. Geopolitical shocks happen, and markets often overreact in the short term before finding their footing. It's a time to be cautious, stay informed, and perhaps review your portfolio's exposure to commodity-sensitive sectors. What happens next in Venezuela is anyone's guess, but by understanding these key financial channels, you can be better prepared for whatever the market throws at you. Thanks for watching, everyone. If you found this breakdown helpful, be sure to hit that like button and subscribe for more financial analysis. Let me know your thoughts on this situation in the comments below. Stay safe, and I'll see you in the next video. Hey everyone, welcome back to the channel. Today, we're diving into a major global event and what it means for your money. We're talking about the crisis in Venezuela, especially with the recent dramatic developments involving U.S. military action and the capture of President Nicolás Maduro. How will all this turmoil ripple through the global stock markets? Let's break it down. First, let's understand the immediate connection: oil. Venezuela sits on some of the largest proven oil reserves in the world. Historically, any disruption in a major oil-producing nation sends shockwaves through the market. When oil supplies are threatened, prices tend to spike. This is because oil is the lifeblood of the global economy, powering everything from our cars to our factories. So, the instability in Venezuela is naturally making oil traders very nervous. We can expect to see some serious volatility in crude oil prices in the short term. Higher oil prices mean higher costs for businesses, which can put a damper on corporate profits and, in turn, weigh on stock prices. But there's another side to this coin: gold. Gold is often seen as a safe haven asset. When geopolitical tensions rise and uncertainty fills the air, investors flock to gold. It's like a financial security blanket. The events in Venezuela are a perfect example of the kind of instability that drives investors away from riskier assets like stocks and into the perceived safety of gold. So, as the crisis unfolds, watch for gold prices to climb. This isn't just about Venezuela. It's a reflection of broader market anxiety. When big, unpredictable events happen, gold is where many people park their cash. Now, what does this all mean for major stock markets, say, for example, the Indian stock market? Here's where it gets interesting. While the headline news is dramatic, the direct impact on major indexes might be more limited than you'd think. Why? Because for the past several years, Venezuela has been economically isolated. Due to sanctions and its own internal economic collapse, its role in the global economy has shrunk significantly. Its oil production, for instance, has plummeted to a fraction of what it once was. This means that while the situation will definitely cause short-term jitters and price swings, especially in oil and gold, it's unlikely to derail the entire global stock market on its own. Major economies and their stock markets are diversified and resilient. They aren't as dependent on Venezuelan oil as they might have been decades ago. For a market like India's, the bigger drivers will continue to be domestic factors like corporate earnings, central bank policies, and local economic growth. The Venezuelan crisis will be a factor to watch, a piece of the global puzzle, but probably not the main event for your portfolio. So, to sum it all up, expect short-term volatility. Oil prices will be jumpy, and gold will likely shine as a safe haven. This will create ripples in the stock market, causing some ups and downs. However, the long-term, direct impact on major stock indexes is expected to be contained because Venezuela's economic influence has already been greatly diminished. The key is to stay informed but not to panic. Market reactions to geopolitical events are often swift and sometimes exaggerated. The real test is the underlying economic fundamentals, which are far more complex than a single news headline. What are your thoughts on this? How do you see the situation in Venezuela affecting the markets? Drop your comments below. I'd love to hear your perspective. Thanks for watching, and if you found this video helpful, make sure to hit that like button and subscribe for more insights into the world of finance. See you in the next one.